Hey everyone, welcome to Your Inbox Last Night. I'm Michelle Tivy. It's February 19th, 2025, and while you were busy having a life, the fintech world was busy filling your inbox. We've got some spicy headlines today, including why XRP holders might be getting squeezed out, how Musk's latest AI play is making waves, and whether banks are finally getting the fraud fight right. Let's dive in. There's enough happening that we should start with a federal update. This section will include everything Musk and Trump related to our federal payments infrastructure. Banking Dive reports that CFPB firings and concerns over data destruction have regulators on edge. Banks are backing away from DEI initiatives, likely thanks to Trump's growing influence. Banking Dive. Elon Musk just launched SuperGrok, which, depending on who you ask, is either the next great AI revolution or another vanity project, the AI report. Meanwhile, Axios says DOGE, New York, and FEMA banks are now somehow in the same sentence. So, business as usual. And crypto exchange founder Arthur Hayes is out here claiming that Trump's Memecoin is going to upend politics and political communication forever. The man does not lack for bold predictions. That's from the Defiant. Time to turn to our popular industry news sources. Wells Fargo has managed to shake off its 10th consent order, but don't pop your champagne yet, 4 more remain. Banking Dive. Mastercard is launching a mid-market accelerator in the U.S. to help businesses innovate payments, the Paypers. KPMG says fintech investment has hit a 7-year low, which is about as comforting as it sounds, KPMG. And banks are facing a fresh wave of threats from credit card surcharges, according to American Banker. After months of doom and gloom, Computer Weekly reports that fintech may finally be showing signs of recovery. While investment numbers are still low, KPMG says we're at a 7-year low. There are early indicators that some fintechs are adapting and bouncing back. Could this be the start of a turnaround? Despite all the hand-wringing about tech layoffs, central banking reports that American fintech firms aren't struggling to find talent like their global counterparts. While other countries are scrambling to recruit, the U.S. still has a deep bench of fintech workers ready to go. And on the consumer side, Pulse Network reports that people are loving their debit cards more than ever. With debit use steadily increasing, banks are focusing on strategies to make their programs best in class. Seems like debit isn't going anywhere anytime soon. With fraud hitting record highs, banks are scrambling to respond. Payments Dive breaks down some of the new strategies financial institutions are using to combat rising payment scams. Whether these methods actually work or not is another question, but at least banks are finally treating it like the crisis it is. While everyone talks about front-end fintech innovations, Electronic Payments International argues that the back office needs to be just as much of a priority, especially in the age of instant payments. Banks and processors that don't get this right could end up with serious operational headaches. Meanwhile, in Canada, Payments Canada reports THAD payment innovations are causing a divide. Some people are all for it, but security concerns are still a major issue for a large segment of the population. It's a classic case of progress versus risk, and regulators will have to navigate it carefully. Turning now to all things crypto and Web3. The SEC, acknowledging Grayscale's XRP ETF application, has sent XRP prices soaring. The Defiant. But the Crypto Basic says, don't get too excited. 95% of XRP holders might end up priced out of their own investment. Meanwhile, This Week in FinTech is looking at crypto-backed credit because, come on, who doesn't love risk on top of risk? Let's check in on the AI in FinTech report. The Fintech Times says AI is getting more involved in credit risk decisions because what could possibly go wrong? Google Pay is rolling out AI-powered voice payments, so soon enough, your wallet will talk back to you. That's from India's News 18. Let's check in with Mr. X.
Well, now, sugar, the folks over at Forbes have gone and published their FinTech 50 list for 2025. Bless their hearts. Every year they round up the biggest, boldest, and shiniest names in the industry. And every year we get to play my favorite little game, who paid to be on the list? See, in my circles, we don't just look at who made the cut, we look at why. Some of these darlings are truly pioneering, no doubt about it, but others, well, let's just say the right PR firms, VC backers, and friendly strategic donations can work wonders. You pitch it just right, and suddenly your AI-driven, blockchain-provide, quantum computing P2P lending startup is revolutionizing finance, even though it ain't made a dime in revenue. Word in the cigar lounges is that a couple of these hottest fintechs are burning through cash faster than a Vegas high roller on a losing streak. One in particular, who just announced a jaw-dropping valuation, might be keeping some very creative accountants busy behind the scenes. Let's just say, if you tilt the balance sheet a certain way and squint, the numbers almost make sense. And another? Well, let's call them a fan favorite among regulators, the kind of favorite that gets extra homework from the SEC. But don't worry, darling, they'll keep smiling for the cameras, at least until that next capital raise goes sideways. So, my dear lovers of insider dirt, next time you see a fintech getting too much love in the press, ask yourself, is it innovation or is it just expensive storytelling? Stay sharp. I'm your one and only Mr. X. See y'all back here tomorrow.
Ooh, Mr. X, that was a spicy take, my friend. Not saying you're wrong, though. Well, that's today's rundown. I'm Michelle Tivy from Payometry Labs. If you liked what you heard, don't forget to like, subscribe, and share your inbox last night. Because, let's be real, you don't have time to sift through 50 newsletters a day. See you tomorrow.